Hello to everybody out there, the viewing public, the YouTube community, ladies and gentlemen, students, researchers, and anybody who may watch this presentation. Once again, I'm here, yours truly, ready for another segment of this channel, Adorable Edu Info. For this time, I prepare to discuss an exciting subject matter as a continuation of my previous presentation entitled The Basic Principles of Debit and Credit in the Study of Accounting. But before we proceed, once again, I'm inviting you, please join me. And if you are new to this channel, do subscribe, click the notification bell, choose all, so that you will get notified and be updated every time I have a new presentation. So, let us proceed with our subject matter by means of laying the predicate first or the foundation of our topic. Previously, I already made a presentation on accounting equation and the 5 major accounts in accounting. For this time, we will deal on the basic principles of debit and credit. Combining your knowledge on the equation and your knowledge on the 5 major accounts together with your knowledge with this basic principle of debit and credit, then you can proceed all the way understanding deepest analysis required in the study of accounting. Let's have now the general rule on debit and credit. Debit refers to the value received. Take note, debit refers to the value or amount received, while credit refers to the value or amount parted with or given up. Therefore, if you receive an amount, the amount or the value that you receive should be debited, and the corresponding amount in consideration of what you have received, it should be credited because that is an amount parted with or given up. Next, debit is always on the left side, while credit is always on the right side. It cannot be otherwise. It cannot be interchangeably. Remember our accounting equation? The left side refers to the debit, while the right side refers to the credit. Let us have now a simple transaction and try to apply the two mentioned basic rule. Here is our simple transaction. JRTW purchased merchandise for cash amounting to 150,000. Let's have our journal entry. Our entry, merchandise inventory, debit 150,000, credit cash 150,000. Let's try to apply the two above mentioned rules. It says in number 1, debit refers to the value received. What is the value received in this transaction? It is the amount of 150,000 as an inventory. Therefore, merchandise inventory should be debited and the amount is 150,000. What is the consideration of what has been received? The consideration is refers to the amount parted with or given up, which is in this transaction refers to the cash, to the amount paid. Therefore, it should be credited. Cash, the amount should be credited. Therefore, in our entry, cash 150,000 is credited. Let us now apply rule number 2. It says debit is always on the left side, credit is always on the right side. Try to look our journal entry. Our entry is merchandise inventory 150,000, debit, cash, credit 150,000. Take note, class, our credit is found under debit, but it is a little bit indented going to the right direction. Try to see our journal entry. It is indented. Cash, the position of cash is a little bit indented going to the right to denote that credit is on the right side. Together with the amount posted, the right side refers to the credit. Cash is credited, therefore it is on the right side. It is indented on the right side, while debit, it is on the left side. Therefore, debit is always on the left side while credit is always on the right side. Let's go now to rule number 3. Assets are generally debited. Take note of that. Remember our equation? Assets is found on the left side, and the left side is debit. Therefore, assets are generally debited. But what is now the exception? Under the exception, when you are reducing or giving up asset, under the exception, it should be credited. Of course, in order to reduce, you have to make an opposite posting. So, under the exception, assets should be credited. To simply understand our rule number 3, let's have a simple illustration by taking up the previous transaction. JRTW purchased merchandise amounting to 150,000 for cash. Our journal entry is that debit merchandise inventory of 150,000 and credit cash of 150,000. This journal entry represents application of rule number 3 under the general rule as well as the exception. Under the general rule, assets are generally debited. In these transactions, merchandise inventory is debited, and merchandise inventory is asset because that is the amount received. It purchased merchandise, therefore the business received merchandise inventory, therefore it is debited. As an exception, cash is credited. Cash is also an asset because we are now reducing our asset in order to afford the payment. So we have to reduce our asset by way of cash. Therefore, we are posting cash 150,000 under the credit posting under the exception. So, as an exception, asset can be credited or should be credited when you are reducing your asset. Let's take up now rule number 4. Under number 4, expenses are generally debited. The exception, when you are reducing or making adjustment. Under the exception, expenses are credited. Of course, in order to afford deduction or reduction, there must be an opposite posting. And since generally expenses are debited, in order to appear deduction or reduction, it must have an opposite posting, or under the exception, it must be credited. For easy understanding, let's have a simple presentation for rule number 4. Example, on October 1, 2020, the business RJTW made a 5 months advance payment for a space rental amounting to 10,000 per month for a total of 50,000. Therefore, on October 1, there must be a journal entry in order to reflect expenses because there is a payment of rental expense on October 1 amounting to 50,000 representing 5 months advance of rentals. So our journal entry, rent expense of 50,000 debit as a general rule because expenses as a general rule are to be debited. And there is a corresponding cash credit of 50,000 in order to appear payment, in order to appear deduction of asset because of payment of expenses. Let's proceed now to the exception. Under the exception, in rule number 4, expenses should be credited when you are making deduction or reduction of expenses or you are making adjustment. In this situation, there is a recorded expenses on October 1 amounting to 50,000. Take note, at the end of the accounting period, especially at the close of the calendar year, December 31, the book should be closed. And therefore, the correct amount of expenses should be reflected. What should be now the correct amount of expenses starting October 1 up to December 31? It should only be 3 months for the month of October, November, and December. There should be only 3 months correct amount of expenses. But take note, what is recorded on October 1 is 50,000. Therefore, that 50,000 expenses should be corrected. There should be now an adjusting entry or adjustment at the end of the period on December 31 in order to reflect the true amount of expenses, which is only 3 months or 30,000. So, in order to reflect the real amount of rent expense at the end of the period. On December 31, we have to make a correcting entry or adjusting entry. What should be now our adjusting entry in application of our rule number 4? In rule number 4, as an exception, expenses should be credited in order to make or appear deduction or reduction of expenses. Our recorded expenses on October 1 is 50,000. The real amount is only 30,000. So we have to deduct 20,000. So we have to make an entry or credit posting of expenses 20,000. What should be our correcting entry or adjusting entry? It should be prepaid rent expense of 20,000 debit and credit as an exception to the general rule, credit rent expense of 20,000. Therefore, in this adjusting entry, this is an application of the general rule in number 4. The general rule expenses are to be debited, exception when you are making adjustment or when you are correcting the recorded expenses, expenses should be credited. As in this case, there is a credit of rent expense of 20,000. Analyzing further our adjusting entry on December 31, at the end of the period, we have now a prepaid rent debit of 20,000. This prepaid rent debit of 20,000 is considered asset. The only expense amount is 30,000. 20,000, although it is part of the payment, it remains for accounting purposes, it remains an asset. That's why the account title is prepaid expense, because it's not yet incurred as an expenses. Let's go now to rule number 5. As a general rule, liabilities are to be credited. Remember our equation, liability is on the right side because that right side composes the credit accounts like liabilities. Exception, under the exception, liabilities should be debited when you are reducing your liability as when you are making payments. So let's have a simple illustration. Example, on October 3, 2020, a bank released a loan to the business JRTW for 150,000. As a general rule, liability should be credited. Therefore, our entry is debit cash. As we receive cash, debit 150,000 and credit notes payable of 150,000 in compliance with our general rule. General rule, liabilities should be credited. Here is now the exception under the rule on liability. Under the exception, liability should be debited as when you are reducing the amount of liability or when you are making payments. Let's have a simple illustration. On December 30, 2020, the business JRTW paid the quarterly amortization of 40,000 inclusive of interest of 2,500. Under this transaction, we have to make a journal entry. Our journal entry, debit, take note, debit notes payable of 37,500. This is under the exception. Under the general rule, in our previous transaction, liabilities are to be credited. Now, under the exception, it should be debited as in this case because of payments. In order to reflect payments, you have to make a debit posting of liabilities. There is also a posting of interest expense of 2,500 as a general rule. Expenses are to be debited. And another cash of 40,000. This is as an exception to the rule on asset. Generally, assets are to be debited, but when you are reducing your asset, as in this case, you are making payment, you are deducting from your cash. Therefore, you have to reflect an opposite posting, credit asset or credit cash. Let's proceed now to rule number 6. Capital or equity are to be credited. The exception, when the business suffered losses, under the exception, capital or equity is to be or are to be debited. Let's have a simple illustration. expenditures under the general rule. Example, on October 1, 2020, the owner, Juana, invested an amount of 300,000 in her business, JRTW. Under the general rule, capital account should be credited. Therefore, our journal entry, cost of 300,000, representing cost, the inflow of cash in the business of 300,000, and credit capital of the investor in the amount of 300,000. Under the exception, in rule number 6, capital or equity should be debited when the business suffered losses. Example, on December 31, 2020, the statement of comprehensive income showed a net loss of 30,000. Therefore, this is a case of net loss. So, our journal entry, Juana capital as an exception, 30,000, and credit, income and expense summary, 30,000. This is a case of exception to the general rule. The general rule, capital should be credited, but as an exception, when there is losses, when the company suffered losses, then in this case, Juana capital is to be debited in the amount of 30,000, representing the loss suffered by her business. Let's go now to rule number 7. Under rule number 7, income or income account as a general rule should be credited. The exception is that when making a deduction or reduction from income or making an adjustment or correcting entry. Let's have a simple illustration with regards to the general rule that generally income should be credited. First example, assuming the business engaged in trading or merchandising, one of this source of income or this main source of income is sale. So, the entry when there is a sale, debit cash, or if it is on account in the form of receivable, then the credit is sale. Sale as an income account is always credited. There is no such a thing as debit sale. Sale as an account is always credited. If the company is engaged in service business, the entry should be debit cash and credit service income. Whatever the income received as a sort of service, then service income is to be credited. There is no such a thing as debit service income. Service income is always credited. Let's proceed now to the example under the exception on rule number 7. Take note, under rule number 7, income should be credited as a general rule. Under the exception, income should be debited. And the instance is that when you are reducing the recorded income or when you are making an adjustment because the recorded income, portion of that recorded income remains unearned. For easy understanding on the exception under rule number 7, let's have a simple illustration. Example. A vacant space of the office building was offered for lease. Then a tenant made an advance payment of 20,000 per month for 5 months on October 1, 2020. Therefore, at the time of payment, October 1, 2020, there should be a journal entry in the amount of cash debit for the amount of 100,000 as a receipt of cash and credit other income. Under the general rule, income is credited. So, credit other income 100,000. Why other income? Because that is an income other than the usual source of income. Now, at the end of the period, December 31, 2020, the book will be closed. Therefore, the proper amount of income should be determined. Take note, that is an advance payment for 5 months. But at the time of the closing of the book, December 31, there are only 3 months that are already consumed by the tenants. So, the income should be only for 3 months, good for the month of October, November, and December. So, we have to make a correcting entry or adjusting entry in order to reflect the correct amount of other income. This time in recording the adjusting entry, it should be now time in order to apply the exception under the general rule. The exception is that in order to make a correcting entry, in order to reflect the correct income, there should be now a posting of debit other income as an adjustment, as an application of the exception to the general rule. Therefore, our entry would be at on December 31, other income 40,000, then unearned income credit 40,000. Why unearned income? That represents liability. Although the amount is already collected, but it's not yet earned, and it is on your possession, it is already collected. For accounting purposes, it should be considered as a liability, and the correct account is unearned income. With this detailed presentation, I do hope, I'm pretty confident that my viewers learned something about this topic, the basic principle of debit and credit. Do not forget the 5 major accounts, students. Those are very basic. Out of the 5 major accounts, the 2 would be generally debited, such as assets and expenses. Out of that 5 major accounts, the 3 are generally credited, such as the liabilities, capital, and income. With regards to the exception, just take a look with this presentation. Just have a review with this presentation and couple your knowledge out of this presentation with the previous presentation of the accounting equation. Then, I'm too confident that I have contributed a lot of knowledge for you to proceed smoothly in studying accounting. Thank you so much for watching and listening. Once again, please do subscribe. Click the notification bell so that you will get informed every now and then I have a new presentation. Thank you so much for listening, watching. I love you all. And please